Hey, what's up, guys? I'm gonna go over a couple trades that I took uh, last week going into this week. I'm gonna go over the sector and kind of a lot of things. So, as we all know, oil has been the driver of the last couple weeks, and if you just take a look at what oil has been doing. You can see that, and this is USO. But if you take a look at the crude chart, you're gonna see the same thing, just at a little bit of higher price. But um, we got a really crazy extension. A lot of it has to do with the Russia and Ukraine war, but we started getting a huge move because of oil on a lot of small cap stocks that were playing off of the momentum in the oil names. And just to kind of list a few, we had the main one, really. The main one was INDO. Went from $5 all the way to 87 dollars. We had IMPP, which went from 50 cents to $10. We had um, HUSA, which went from dollar and a half to almost 17. MARPS from $5.50 to $32. ENSV, from 50 cents to almost 9. So you can see that these moves, these are all small cap companies. So, all these are trash. They're not supposed to be up here. And then MARPS is an exception. This is a trust. So, it's not really the same as all these other ones, but it was trading off the momentum. But this one is even more so inclined to come back down to back to where it came from, and kind of trade in that on those levels until it gets moved by you know oil and stuff. Or so the ones I really focused on were INDO, IMPP, and ENSV. So I made initially I took the shorts on these days when they crashed. We can kind of see the same move. If we just kind of go into the intraday price action. Um, ENSV, actually, I didn't trade the day that it crashed. I did on INDO. And then INDO, I basically shorted here a little bit pre-market, and then I added once it started dumping off of the open because I was expecting a big red day. And I thought it had a good chance of happening this day, and it did. And then oil crashed, and that allowed for all the other related tickers that are listed to crash as well. So this was kind of the initial move, and I hit INDO and as well as IMPP this day here. I traded this one a little bit differently. I actually just shorted the bounce and then covered into this big panic, the secondary panic. Um, but now if you kind of go into the daily chart, we kind of already had this initial crash. So what generally is going to happen is you're very likely going to have a bounce back into some of the levels that are higher up, and that's going to be also a great area to short into, because if you learn really from Tim Sykes, or if you followed any small cap trader, or if you've traded with some experience in the small caps, you kind of understand the flow that these stocks go. And a lot of it is, you get this kind of initial move. It seems small because of how much it's extended, but this really went from $4 to 15, so extended quite a bit. But then it consolidated, and then the real breakout happened, and that's when you had this parabolic move, almost $200 on a stock that came from $5. and a stock that's not really a good company. So, um, what's it doing up at $100? And the reason is because of the momentum it caught off of, really the oil sector and all that momentum. So, in the long term, let's say 5, 6 months down the road, this is very likely to be trading back down at $10. So with that kind of in mind, I was, even if you've learned kind of how a small cap stock trades on a bigger picture, when you get these type of moves, you'll get that initial breakout, you'll get the parabolic, it'll crash, and then it'll have a bounce, and then after the bounce, it'll start to slowly fade off. So, Tim Sykes calls it the seven step framework. I think this is the number 6, and then the fade is the 7. But regardless if you know that framework or not, in whatever steps, the idea is the same. That hey, the company is not supposed to be trading at $24. It should be trading at $5 to $10, right? It had a lot of momentum, and now it's coming down. So it's not going to just come straight back down from 100 to $5 just in a couple of days. It's going to have usually a bounce, and you can see the same price action with INDO. You can see the same thing on IMPP. You get that crash, you get that bounce, you get that fade. ENSV was the other one I traded. You get that crash, then it bounces, then it fades. So and then you get the same thing on a lot of these other ones like USA and MARPS and so forth. But I just picked a couple that I wanted to trade, and I stuck with those ones. So I spread my risk on a few names, and not really take. I could have, I guess, made a case for being in all of them, but I didn't want to put too much capital at risk. But um, so the ones that I've covered are IMPP. So basically, I shorted into this bounce, and then I ended up covering this morning at the open when it gapped down, and as well as ENSV. I shorted this bounce, and then I covered um, on the gap down on the open. INDO, I'm actually still holding because it's the weakest one out of all of them, and I still think it has some range to give back, maybe in the next couple days. Probably tomorrow, I'm thinking that I might be covering this one. I'm really looking for $20, between $15 to $20 is kind of where I'm thinking it might head to. Again, I could be completely wrong. This might gap up and squeeze tomorrow. I'm not sure. But, I'm still well in the green, so I'm not really worried too much. But ideally, the target on would be $15 to $20. Um, but the way that I traded these is, ENSV is kind of going to be the better chart, and it's going to have where my executions were a little bit better. But you can see after this crashed, um, we found a bottom, and I was considering maybe taking it here this day, but then again, it really didn't bounce that much. It didn't give me good enough risk to reward. I wanted it to go higher. I really wanted it to bounce, into some of these levels up here. Basically, about $5, and between 5 and 6 would have been perfect. And really at $4, the risk to rewards to me was not ideal. So I didn't end up taking that because I wasn't really willing to risk. The next level up would really would have been like the $5 level, and 6 kind of being the better level, and it was just too far away. So I waited to get that push closer to 5, and that happened on this day here. And you can kind of just see, we get a push in the morning, and then it has a lot of trouble up here close to 5. So that's where I took my entry with the goal of swinging it back down to 2.5 to $2. I covered at 270s on this one. It just didn't give us more, but I just took what I could get before we bounced again. But this pattern is very simple. Sometimes it's hard to identify a risk, but use the levels that the chart has developed, on the way up. And, to me, I didn't want to take it at 4. So what's the next level up? And the next level up was going to be 5. So, and 5, I was willing to take it at. So that's where I shorted it, and, just wrote it down for a couple of days. And we got a nice gap down. Um, and, it was the IMPP, very similar situation, but with IMPP. I did end up taking it here into this push into the fives, because this was, enough, of a push for me to be interested in. And as you can see, it retested that same $6 level, um, the following day before ultimately it faded off again. So, um, you can kind of just draw a line and see that the $6 level is the most important level in this chart, and it's failed. Kind of one time here, it's had support at $6. On these couple of days, um, that's where the initial pull went into, was a $6 level. Then it topped out one, two, three more times. So you can see that $6 was really the biggest key level on this chart. So you can short into these levels, into the $6 level, by identifying it. And you had plenty of chances to do that. You could have done it this day, and you can say that this is hindsight, but really, if you short into $6, you just look back the last couple of days, and $6 was the major level. And if you missed it this day, you had another chance at $6 again this day, and then now you have a confirmation that $6, multiple times now, multiple days, that $6 is kind of the level to use. So that's kind of what I was shorting against, and then I just covered into this gap down here. So, um, ideally, IMPP and INDO and HUSA and ENSV and all these other oil names, I really see them kind of just fading off in the next, weeks or so. But there's going to be opportunities down the road. Hopefully, when they pop back up, maybe they gap, or maybe they do some sort of multi-day run back into these levels. And, remember that $6 was an important level. Remember that for next time. And you'll see how you can use those levels as levels to risk off of. But, hopefully we have more opportunity on these in the next several months. If they offer some sort of gap ups on news or on oil, or some sort of multi-day run into these levels would be great, and then we can short them again. But in the next couple weeks, I do think we're probably going to slowly fade off, even lower. But that's how I traded the sector. And the only thing that I would say that I didn't do well was trading it front side. um, I it was really kind of I missed. A lot of people have compared this oil run to the shipping run, in 2016, whenever it was. I did not trade that sector. I didn't even start trading back then. But so this was really kind of the first time I really traded something as crazy as this oil sector. So, gained a lot of experience, and again, I didn't really think that we were going to run up so much. Um, so I know that for next time. But the mistakes really I made was, I tried to short into this day, the day before. That's kind of where I lost my my gripping a little bit, and took some hits here, a lot more than I would have liked. And if I had just stayed a little bit more patient, I could have avoided the losses on the front side. But I made them back and more on the back side. Um, so it was, I traded it very well in my opinion backside. Just now for next time, I know that I need to just stay extra patient on the front side. And that's really about it on kind of my analysis and how I traded these things.